Hello and welcome to Morning Brief Market Sunrise. I'm Ramzan Karmali, live from Yahoo Finance's studios in London. It's Thursday, 20th November. Coming up on the show, the Nvidia effect. Its earnings have given tech stocks a supercharge. Investor focus now turns to the latest jobs report. Will it give the green light for a rate cut? And I'll bring you the earnings live on the show from the world's biggest retailer, Walmart. So grab your coffee and let's own the morning. It's all about Nvidia this morning. It increased the sales of the chips at the heart of the AI boom even faster than Wall Street had forecast in Q3 and even upped its predictions for the current quarter. Revenue rose 62% to $57 billion in Q3, and now Nvidia reckons Q4 revenue will be around $65 billion. That's $3 billion more than Wall Street had estimated. Well, it's no surprise that Nvidia's shares are soaring in the pre-market. CEO Jensen Huang shrugged off talk of an AI bubble after hundreds of billions have been wiped off the value of tech stocks in recent weeks. Well, last month, Nvidia's market capitalization briefly eclipsed $5 trillion. Now it's valued at a mere $4.5 trillion. Nvidia's solid earnings have helped boost other tech stocks today, not just in the US, but around the world. Well, let's get more analysis on Nvidia's results, and I'm joined now by Chris Brigatti, Chief Investment Officer at SWBC. Chris, thanks so much for joining us here. Well, first of all, what's your reaction to those results? The AI bubble, it's a myth, right?
I wouldn't say myth, but it's definitely not upon us at the moment. So I think we got a lot of breathing room, and the forecast and the expectations were widely exceeded. So this is very positive news and constructive for Nvidia, along with all the other chip makers out there.
Now, one thing that Jensen Huang has mentioned in his comments is that he's not too worried about sales to China. So going forward, is he right? Does he not have to worry about selling chips to China?
I think if he does get the opportunity to sell to China and the U.S. does allow those sales to take place, that's just a bonus for the investors as well as Nvidia to get another very large player in the space that can use the chips and will be very actively involved in it. So I think it's just an additive to the ultimate prize.
Now, Nvidia's made money by selling these AI chips to lots of big tech companies, but we're yet to see some really massive revenues from those companies. Should we be worried? When will we start seeing them? And will we actually see them, do you think?
I think we will see them, and usually the cycle is somewhere between 18 to 24 months from the start of the data centers, and many of those data centers that those makers and those providers started about 2 years ago. So we're coming up on the period where we might start to see some revenues, probably not from Blackwell yet. We still have some time to kill for that, but it's down there. It's definitely coming down the pike.
Now, Jensen Huang talked about Blackwell sales, saying they were off the charts. Can that continue? In the past, Nvidia have talked about supply issues. Can that actually continue? Can that demand continue? And will he be able to supply that going forward?
I think so, because the additive benefit that the Blackwell chip provides is the fact that it's much more energy efficient. So there's other benefits for the users to be able to take advantage of and to suggest that it can improve efficiencies and improve costs and expenses for them. So I do think that this has some runway.
And what do you think about the rest of these big hyperscalers that are using AI at the moment? Are you bullish on them all right now? I know you own Nvidia stock, but what about the rest?
Generally speaking, yes. I mean, a rising tide lifts all ships, and in this case, I think it will with Nvidia, and we're seeing that already with some of the stock prices. Now, there might be some lower players that might not ultimately benefit, but the bigger names in the space should definitely continue to see the benefits.
And just going forward into 2026, I mean, there are other factors at play. We're not just AI. What about things like interest rates and the economy? Are you not worried that there's some signs of weakness here?
I'm slightly concerned on that front. I mean, we are coming upon a period where we can expect a decision from the Fed again. I do not expect a rate cut to happen this time around, simply because the void of information that we've had. But ultimately, I think they're going to continue to push towards lower rates, and that should be a boon for investors across the board, as well as chip makers. Technology especially tends to benefit as we have falling interest rate environment.
Chris Brigatti, Chief Investment Officer at SWBC. Many thanks for joining us here on Yahoo Finance.
Thanks for having me.
Okay, well, there's still plenty for investors to keep an eye on today that's not just related to Nvidia, so let's hear from Josh Lipton.
Time now for To Watch, Thursday, November 20th. We're going to start off on the labor force. After the longest government shutdown in U.S. history, the delayed jobs report for September is finally coming out on Thursday. Economists forecasting a modest rebound in the job market with 50,000 non-farm payrolls being added and unemployment and hourly wages holding steady at 4.3% and 0.3% respectively on a month-over-month basis. Taking a look at earnings, we're going to get more insight into the health of the retail sector on Thursday with reports from Walmart, Ross, and Gap. Walmart announced the results for the third quarter before the markets opened. Analysts expecting Walmart to hit the high end of its sales forecast for Q3 thanks to a strong back-to-school season and consumers continuing to look for value. Lower prices and a bigger product selection are pulling in more customers across income levels, helping boost traffic and same-store sales. And moving over to the Federal Reserve, we're going to be getting a big batch of Fed commentary on Thursday. This is coming after comments from Richmond Fed President Tom Barkin on Tuesday. Barkin saying that he sees cause for caution on the labor market and suggesting it may be weaker than available data signals.
Well, the first thing you need to know is that $1 trillion has been wiped off crypto. In overnight trade, Bitcoin fell to its lowest in 7 months, trading as low as $88,552 before recovering some ground in early trade today. The total market cap of cryptocurrencies peaked at around $4.3 trillion back on October the 6th, but now it stands at around $3.2 trillion. Bitcoin's surge to just north of 126,000 was based on Fed rate cuts and growing institutional adoption. Now, both of these have stalled in recent weeks. The next thing you need to know is that the Commerce Department approved the sale of up to 70,000 AI chips to firms in the UAE and Saudi Arabia. That's according to the Wall Street Journal. Now remember, President Trump and Mohammed bin Salman concluded the Saudi prince's visit to the United States by speaking to more than 400 business leaders. Beyond a defense agreement and talk of the kingdom's human rights record, the visit focused on joint US-Saudi ventures, including minerals and helping Saudi Arabia build a civilian nuclear program. And the last thing you need to know is that we'll get more clues today about whether a Fed rate cut is coming in December. The much-delayed September jobs report is out later. Now it's likely to show US jobs growth likely picked up moderately in September, while the unemployment rate held steady near a 4-year high of 4.3%. It's another sign of its sluggishness. But the markets have become less confident about a rate cut next month from the Fed. And there are growing tensions between Fed members. Okay, it's time now for a quick break, but we'll be back shortly for Stocks in Translation segment, breaking down how to trade around the Nvidia earnings report. Welcome back. Well, with Nvidia's positive results supercharging the market, Jared Blickry has done a great explainer on how to trade the stock of the world's largest company and trade around its earnings.
Nvidia earnings are dominating the headlines, and on today's Stocks in Translation, we're taking a look at how you can play Nvidia stock based on historical probabilities. So first up, I've shown this chart many times before, but basically, if you were to buy Nvidia stock right before earnings and you held it for 1 day, 1 week, 1 month, 1 quarter, 1 year, this is the return that you might have expected over the last 10 years. So we're looking at the median returns over the last 40 reports, 10 years. You can see not much going on. 1 day later, 2%, 1 week later, 4%, 1 month later, 2%, but the odds start going up when you hold for longer periods of time. At 1 quarter, you're looking at a 14% median return. And then this is really the focus here. After 1 year, you basically saw a doubling of the stock price. Now I want to show you, these were the median returns. I want to show you the win rate or the percent positive for the same time period, 10 years. So 1 day holdings, that was positive 60% of the time. 1 week, 65%. 1 month, 58%. Anything under 70%, by the way, I consider to be subpar because stocks tend to go up. When you get to 1 quarter, and remember, that's when we were getting that 14% return, then we see the odds shoot up to 77%. And 1 year later, you are up 83% of the time. So it just kind of shows you that you want to be in that buy and hold mode unless you are a very, very nimble trader, because some of these shorter time periods are barely better than a coin toss. Now I want to show you what the experts are doing. So this chart goes back a few years. In white, we have Nvidia stock price, and in green, we have the median Wall Street price target. And as you can see, it's usually above. That is, the price target is usually above the price. And sometimes Wall Street is playing a game of catch up. So you'll see like right in here a few times that the stock price actually exceeded that Wall Street target here too. And the last time we caught up to it was probably a couple quarters ago, and you can see there is a rather big disparity between the target and the price. Over the last 90 days, since that last earnings report, Nvidia stock has basically done nothing. It's just about flat. Meanwhile, the average price target, or median price target, is up to 237. That is a gain of 19% over that time. So the big question is price going to once again catch up to those price targets, or is there going to be a big disappointment? And is that price target eventually going to catch down to the stock price? We'll have to see about that one, but history says, at least over the last 10 years, and especially the last few years, that Nvidia stock probably catches up to that target. Now we're going to take a look at post-earnings moves. Now these are just moves, and we're talking about range of trading. We're not talking about up or down. So the average daily move in Nvidia stock any given day since its last earnings report is 3.4%. Now what the options market is implying that is expecting over the next day after the earnings are announced tomorrow on Thursday, what is the return or what is the range going to be? 7%. So basically more than double that. And then I took a look at the last 10 quarters, so that's 2.5 years. What was that post-earnings day move? Well, that was actually 10.7%. So we have seen a reduction in volatility over the last few quarters here with respect to Nvidia stock. So that's something to keep in mind. We'll probably see above average volatility in the earnings reaction, but that's also going to be probably maybe double what we've seen over the last 90 days on those non-earnings days. Now I want to get into the return. So this is how much money you would actually make. Post-earnings average return over the last 10 quarters, 3.6%. Now, 6 of those were wins, 4 of those were losses. So of those 6 wins, it was a positive a return of 9%. And of those 4 negative losses, those were 4.5% on average. So you put it all together, Nvidia stock is kind of a tricky one to play sometimes, especially in the short term. No doubt it has been a long-term winner for a lot of investors here.
Okay, we're heading for another short break, but we'll be back with breaking news. Retail giant Walmart's earnings results have just broken. I'll be bringing you those next. All right, some breaking earnings now from Walmart, the world's largest retailer. It's just reported its Q3 earnings, and guess what? It was a beat across the board. Revenue in Q3 came in at $179.5 billion with earnings per share of 62 cents. Now, the retailer was keen to highlight the growth of its e-commerce business, up 27% globally. But look at the shares, down 2% in the pre-market as well. So even though it was a beat, the investors don't seem to like what they've heard. Now, Walmart's also increased its outlook for sales in the full year, a sign that the world's biggest retailer is winning over those price-sensitive shoppers and grabbing more digital spend. Now, Walmart has made a shift towards becoming an AI-equipped work environment. That has been approved by its CEO, Doug McMillon. He's set to retire early next year, handing the reins to John Furner. And remember, Walmart has announced big plans for the future with ambitions of integrating AI super agents into the shopping experience. It also announced that it's working with OpenAI. We'll have an interview with the CFO of Walmart later on in the day in Market Catalyst, so stay tuned to that. It's time now for today's trending tickers. Well, Here are 4 stocks that are being absolutely boosted by Nvidia's strong earnings. Jensen Huang even mentioned them himself in an interview last night. TSMC first up, the world's largest chip manufacturer. It's producing Nvidia chips, including the flagship Blackwell series. And as the Nvidia CEO said himself, demand for these, well, it's off the charts. The New York listed shares of the Taiwanese chip manufacturer were well in the green after Nvidia posted results. Number 2, Samsung. The South Korean tech giant has ramped up production of bandwidth memory and semiconductors this year, and that giant investment is paying off. During Jensen Huang's recent trip to South Korea in late October, Samsung and Nvidia announced a massive partnership to build an AI chip factory and work together on the next generation of memory called HBM4. Number 3 and number 4, Micron and SK Hynix. And again, it's all about memory because Nvidia chips need massive amounts of computing power. Micron is developing with Nvidia on new technologies called SOCAM. They're meant to improve AI workloads. And SK Hynix is also working on new high bandwidth memory with Nvidia while using a huge number of Nvidia chips to speed up its own research. So yes, Nvidia is boosting markets broadly today, and almost all of the stocks of major chip makers jumped on its outstanding earnings report. But these are the 4 stocks that are probably most closely tied to Nvidia. Now, before we move on, a couple of other tickers to watch for us. First of all, China's CATL, the Chinese leader in battery technologies, is down sharply today in Hong Kong, and that follows reports that one of the company's largest shareholders plans to offload 1% of his holdings to institutional investors. That matters for America too. House Republicans are calling for more restrictions on the imports of Chinese-made solar and grid components, and CATL might get a big hit from that too. And finally, Palo Alto Networks, the global cybersecurity giant, fell more than 5% in the pre-market on the Nasdaq, and that follows earnings in which the company beat expectations. They're now just down below 4%, but just slightly. For example, revenue actually came in at $2.5 billion versus the $2.46 billion that had been expected. Maybe that's another reminder that Nvidia is setting a high bar here. And speaking of memory chips, why are they getting so expensive? Well, our tech editor, Dan Howley, has the answers.
Yeah, so data centers use this thing. It's going to get real nerdy. Hold on. I promise it'll get better. They use this thing called DRAM, right? And then they use that to make what we call HBM, high bandwidth memory. That's the stuff that's basically the memory inside of these data centers that they use to run AI. Problem is, DRAM is a common thing that is also used in smartphones, in laptops, in medical equipment, in cars. It's not the same. It's not HBM. It's called DDR. So they basically are just 2 different offshoots of the same thing. Now, memory makers get higher margins selling HBM versus DDR, which is what you would use in your laptop. And so we're seeing an increase in price for RAM for things like your laptop, smartphone, medical equipment.
So basically what they're doing is they're probably diverting some of their capacity that would normally be used for DDR, the stuff that goes into more everyday electronics, to make HBM because they're earning more money on it.
Yep, exactly. And so because of that, we're starting to see prices, go from, they sell DDR in sticks, right? And so we're seeing prices go from about $100 to $250 in a matter of weeks. And so it's going to continue on this kind of spike. And the thing about the memory market is it's incredibly cyclical. And so you'll have these kind of dearths of memory for consumer products or other types of products, and then you'll have a glut and prices come back down. And so right now, it's kind of in a weird space just because when was the last time we had this massive build out of data centers? Never, right? We had, the cloud, as that was taking off, data centers are being built, but there seems to be a lot more of a rush to get these AI data centers built. And so because of that, the RAM is just disappearing faster and faster.
Well, and there just aren't that many companies that make it either.
No.
What, are there 3 companies?
There's 3, and then there's other memory companies, but the big ones are SK Hynix, Micron, and Samsung. And so, they're doing both of these now. And so there's a few things that companies can do to try to get the prices back down. They can lean on those suppliers. I mean, good luck on that. They can make devices that are less powerful, or they can raise the prices. The problem is, we're coming up to the holiday season. People are going to be going out and shopping. If they're going for a lower end products, there's not a lot of margin room.
But is this something that will affect the cycle that quickly? In other words,
I don't
when
think
will
it's
it start to
necessarily-
make its way into actual device prices?
I don't think it's gonna hit necessarily that soon, but it will start to hit, I would say, maybe in the next few weeks, next month or two.
Gotcha.
It really is going to be something that will start to see creep up. And again, it depends on how these companies are going to handle this, right? Are they going to pass on the pricing? One expert that I spoke to said, yeah, it's on us now, right? Others have said, maybe they won't, maybe they'll find other ways to change the pricing structure of their devices, whether that's consumer or whether that's going into commercial. So it is going to be one of these things that, a kind of unforeseen issue of this data center build out, right? It was, electricity, water, GPUs, okay? Now it's like, oh, well, now my laptop's more expensive. Why is that a thing? So yeah, it's going to be an issue for a while.
All right, that's fascinating stuff there from Dan Howley, our tech editor. Okay, before we go, let's check in on the markets. Let's start with Bitcoin, and it is trading higher now after falling earlier, as I mentioned, to its lowest in 7 months, down at just over $88,500, but still well off that peak of 126,000 it was in October. Let's move on to gold. And the price of the safe haven, well, it was edging lower in earlier trade. Let's see where it is now. It's still slightly below in the red there. But now one of the reasons why gold is faltering is that according to the CME Fed Watch tool, the probability of a rate cut next month is down to just over a third. And that's why this September jobs report, which is out later, will be so important. Remember, it's the only set of data that the Fed are going to get before the next meeting. Next, let's move on to see where Nvidia is trading. Obviously, the big trigger for all the markets today. And Nvidia up almost 5% there in the pre-market after those strong Q3 results. Okay, let's move on to Asian markets. And it's not a surprise that chip stocks there have given the region a boost after those Nvidia results. The Nikkei Japan is getting back close towards that 50,000 mark, but still hovering just below. Okay, European markets now. And in early trade, it's a similar picture to what we've just seen in Asia. All in the green there. The tech-heavier indexes performing much better. And where might Wall Street open? Well, US stock futures are rising this morning, pointing to a rebound as Wall Street embraced those blockbuster Nvidia earnings, and that's helped rekindle faith in the AI trade by stemming bubble fears, well, at least for now. And obviously, all eyes will be on that jobs report out later today. Okay, that is it for Market Sunrise for this morning. Stay with Yahoo Finance for continuing live coverage of the markets and your money all day on streaming and online. Don't forget, we have that interview with the CFO of Walmart later on in the day on Market Catalyst. I'm Ramzan Karmali. Go own the morning.